Hi, I'm William Mills, and I'm here at FinovateFall in New York, and I'm pleased to be joined by Jas Randhawa. How you doing, Jas?
I'm doing pretty well. How are you?
I'm doing well. Now, Jas, you're head of financial crimes in the U.S. for Stripe, is that correct?
That is correct, yes.
So tell us a little bit about yourself and what led you to Stripe and what your work is at Stripe.
Thank you. So I lead our financial crimes team for Stripe's U.S. and Canadian business. It covers all aspects of KYC, anti-money laundering, and sanction screening.
Right.
I've been in this role for the last about 2 years now. I used to manage PwC's financial crimes business for Fintechs and larger banks. In my previous life, I've been doing the same work for 15, 16 years. I've just been changing industries.
Right.
But love what I do, and I love this space, and I am pretty passionate about it.
That's great. That's great. Well, it sounds like you have a very important role, because I know this increasingly crime is an issue related to the financial industry. So what changes have you seen in financial crime in the last 12 to 18 months?
So I think in the last about 12, 18 months, what's really happened, first of all, in the larger industry is the fact that we found a new medium to do business. A lot of businesses that were sitting on the sidelines, not wanting to go digital,
right,
or were just dipping their toes in the digital world, they didn't have an option. They had to go digital. With that came a lot of new users, new clients, new transactions, and all kinds of crazy patterns that you will see sitting in the background. The financial crimes community had to innovate fairly rapidly and very quickly to understand all the challenges that the new business and the new opportunity brought to the table. Specifically in the US, the Department of Justice, FinCEN specifically, they've done a terrific job of communicating with the industry what red flags and typologies they're seeing in the back. And these are general methods, how bad actors are, the methods that they're using to launder money.
Right.
And they've tried to enlighten the community a lot more, which means that it's our responsibility then to go back and build controls, make sure we're identifying those patterns and preventing those activities to happen.
Seems like a huge job. I mean, how has the pandemic fast-tracked certain types of crime, and if so, what? So
the pandemic definitely moved the industry in a more non-face-to-face digital environment.
Right.
Has it fast-tracked certain types of behaviors in the back? I do think so. Right. But those I feel are a lot more prevalent on the fraud side and the fraud detection side.
Right.
Again, the mode and the medium of these transactions, because it has changed, it has led to new patterns, especially when it came to lending, a lot of the PPP loans and other associated industries. They've seen a lot of risks and a lot of losses.
Right.
But I feel like both banks and the financial services industry overall, they've done a pretty good job of coming up with controls to mitigate that risk.
Well, it seems to me it's a constant struggle to stay ahead of the criminals. Is that true?
So you have to, and you're right. Traditionally and conventionally, how this industry has functioned is you build some controls and functions and technology in the background.
Right.
And you feel you've covered off your risk that you identified before or at the time of you built those controls. You had identified some risks and you've mitigated them.
Right.
And that puts a barrier to the entry for a lot of these criminals and bad actors into your ecosystem. However, no one just stops trying when you build up those walls. They're always trying, looking for another loophole. They're trying to go around the wall, which means that this is a job of constant, vigilance. You have to have your eyes and ears open. On one end, you have to know what's happening in the industry, make sure you've got great relationships with the regulators and the examiners, and ask them questions about what else should we be looking for. And at the same time, understanding your own risk on how your business is evolving and what exposure do you have is critical. And finally, I think having your own community on the side. A lot of us have had vast amounts of experiences working in banks and fintechs and other institutions. make sure you stay in touch with people you've worked with previously. Pick up the phone and ask them questions on what risks they're experiencing, and then make sure that is not an exposure that you are having on your side. If you do, then build some controls.
Well, it amazes me how much energy and innovation the bad actors have, and if they'd only apply it to good, how much better the world would be.
That's a really interesting question. There are a lot of use cases where law enforcement has historically hired bad actors to really understand,
Right.
What their thought process and what their next steps could have been. I'm sure there have been successful use cases, but you're right. I think if the energies are put, that creativity is put to
Right.
the good use of the society and the financial services ecosystem, I'm sure,
It could be a new fintech, or it could be a new unicorn. So you're face to face with a lot of these folks. What are financial institutions doing to address all of these new changes and new challenges? What are banks doing?
Yeah, so I think, first of all, critical to understand that no one had really anticipated the pandemic to happen.
Right.
So making sure you're baking that risk into your own risk assessment. And I'm not just talking about the financial crimes risk assessments, but the larger risk assessments when you really think what different issues your business could potentially run into. We hadn't factored in pandemic. This is going to be one of the risk factors that are going to feed into the company's risk assessments. And also, how do you go back and predict these unforeseeable circumstances and make sure you're ready for this kind of disruption, which was not planned and it was a little unwanted. On the flip side, talking very specifically about the business and financial crimes per se, huge parts of the industry, banking as one, payments is the other. They've seen a surge in transactions and surge in the business volumes only because a lot was happening online and digitally.
Right.
Other industries like travel, hospitality, they've seen a slump. But in the background, all these new typologies that we have witnessed in terms of ways to launder money,
Right.
and how the bad actors are taking advantage of the fact that you cannot walk into a bank branch anymore. There's a lot of cases related to elderly abuse.
Mm-hmm.
So those kind of typologies that have emerged in the last 1 year, banks are bracing them up for impact. They've built a lot of controls to make sure they've mitigated that exposure to those kind of risks.
What more needs to be done to keep financial institutions, merchants, and their customers better protected?
So first and foremost, I feel like there needs to be a lot more investment in technology.
More investment in what?
Technology.
Okay.
And when it comes to technology for fraud detection, prevention, financial crimes detection and prevention, KYC, identity verification, a lot of technology that we see today is a byproduct of the industry growing, and we are patching solutions together to solve a lot of these questions. There've been a lot of focused and concentrated efforts from a perspective of KYC and identity verification by a lot of companies, including Stripe. So I think that is one area where we've seen a lot of immediate growth and development. There are definitely areas like transaction monitoring, sanction screening, and other risk areas which need a lot more focus and attention.
Well, what technologies are you seeing that are used to best tackle financial crime? I mean,
that's a loaded question.
Okay, I mean, just a general direction or concept.
So the direction, if I had a crystal ball,
right,
and with the information and the intel that I would have from the industry, I think the one area to watch out for is KYC and electronic identity verification.
right. And why is that?
Yeah, there are a lot of standards being set. There is a lot of realization in terms of, when you sign up for an account, companies need to make sure, because they can't do this face-to-face and you're not walking into a branch anymore, that you are who you say you are. And you need to then go and periodically verify that none of these KYC type attributes for you have really changed.
Right.
The government is stepping up their efforts to set standards on what good KYC looks like the way we do KYC today is also based on a lot of regs which are decades old. And there is a lot of effort being made to make sure we are making our regs more recent and relevant. And at the same time, from a technology perspective, from KYC technology perspective, if you think about interoperable identities and portable identities and people being able to own their own identity data, I think that's something that is going to be a huge space to watch out for. I think in addition to that, you're seeing a lot of new vendors play into the space of anti-money laundering transaction monitoring systems. And they're coming up with a lot of modular systems. When I say modular, I mean like systems which are a lot like Salesforce. You are given a platform to use the system to your need, and you adjust and readjust it to the way your business works. Previously, what has really happened is you had a lot of vendors which have pulled together systems for the entire industry. No two banks are alike, even if you play in the same space. So you have to do a lot of customizations and a lot of adjustments, which most financial institutions do not have the bandwidth for. And that is changing. So there are some vendors which are surfacing now, which are working on this modular fundamental of how transaction monitoring should look like. But in the next couple of years, you can definitely expect to see a lot of growth in that area and new players emerge.
Would you say that some of the regulations need to be updated because they were built for an offline world?
I think that's the general comment that you would get from the industry. I think regulation. Let's step aside for a second and think about banking products. You might have a product today which is very cutting edge, and it makes a lot of sense. By the time you launch it, the product matures in about a year, 2 years. It might be obsolete already.
Wow.
So what you're truly today looking at is, it's a digital world. Needs are changing, demographics are changing. The products that you and I like, those products are not liked by a lot of teenagers, and they are the new economy coming into the being. A lot of products are going to be made for them. So to say that our regulations are obsolete, I would not agree there. I do think, however, that there is a constant effort required to refine and refresh guidance around these regulations. And I feel like the government has been doing a decent enough job.
Good.
They've been engaged and involved in a lot of discussions that you see a lot of awareness and an effort being put into understanding what these new cutting edge systems are, what risks they bring to the table, and then get ahead of them and give the industry a framework to work with. So yeah, I'm quite bullish and less skeptical about the regs not moving fast enough.
That's good to hear. Well, where's the future headed in financial crimes? What do you see in the next 12 to 24 months?
So as I mentioned, I think electronic identity verification based on interoperable identities is something to watch out for. Modular systems. You will see a growth in machine learning based solutions. I know it's been over like 5-6 years. We've all been talking about AI/machine learning at conferences, but if you really go out in the market for financial crimes, you don't really see a lot of cutting edge machine learning based systems. So I think those are going to surface, and those systems coupled with RP, robotic process automation technology, that are going to bring down your operational costs for the repetitive work. I think once they get packaged together and they've got good use cases, I think those are the ones that I would watch out for.
Lastly, is there anything else you think would be important to share with the Finovate community that's not here today?
Yes. Make sure you're a part of a larger community. What ends up happening is a lot of people working in this space, you're either working for a bank, or you're working and focused on a fintech or a payments company, or you're a regulator, or you're working in business development. I feel like this whole ecosystem of all of these financial services, merging together is insanely important, and for professionals to develop themselves in this space and to be more recent, relevant, and active for a long term, you have to know what's happening on the other side of the aisle. And operating in these silos of me thinking that, oh, I'm fintech, so
Right.
the bank's an offer me, and bankers thinking, fintech's doing something on the side that we shouldn't be worried about. I don't think that's going to be helpful, at least to the workforce of today. Very important to find your community, look out for opportunities like this event and
Right.
other communities that are being built around this event. To make sure you're plugged in and reach out. The beauty of the financial services industry, based on my own personal experiences, when you reach out to a lot of your peers and people who you look up to, they respond.
Right.
Ask them questions. People want to share their knowledge and their expertise, but make sure you know what you need out of those meetings when you reach out to people. But that's what I would say, that engage. It's going to help in the long run.
Well, that's great advice, because I think if people just ask for help, they'll get it.
Yeah.
So, Jas, I really appreciate you taking the time to visit and meet with me today. And again, this is William Mills at FinovateFall here in New York City.
My pleasure. Thank you.